Hello and welcome everyone. My name is Richard Engberg and I'm an equity research analyst here at Erik Bank. We're focused on tech. With me, I have Henrik Eklund, CEO of BTS, Jessica Skon, CEO of BTS from next Monday, and Philos Anderos, Deputy CEO. Guys, welcome.
Thank you very much. Pleasure to be here.
And I guess my first question will be to Jessica and Philos. Can you please tell us a bit more about your careers within BTS?
So I actually started at BTS when I was 22 in 1999, and that means that I've basically held, I think, every role in the traditional career consultant roadmap, from business analyst to running an office to running a practice to running then North America the last 6 years.
I've actually come into BTS in 2003, so I've been 18 years. I came through an acquisition when my company was acquired. I've held positions leading a country, leading regions, and in the last part, I was leading part of one of the 3 business units, the other markets, which includes a number of regions around the world.
Great. And if we look at the quarter reported today, can you please tell us a bit about the numbers and what's driving the strong growth within the business areas?
I mean, a quick summary here. I still ran the business in the quarter. So 24% revenue growth, of which 20% is organic. And all 3 regions, North America, Europe, rest of the world, they're all growing around 20%, plus the Netmind acquisition. We are looking at a strong market for our services because of the rate of change, and we are taking market share and winning a lot of business. It's a pattern we've seen for quite a while. In fact, it's our 19th record quarter in one row.
Okay, good. And if we look at the different sub-regions, are there any one that is specifically strong during the quarter?
All 3 super strong. Organic growth around 20% in all 3. So yeah.
Okay, great. And are there any certain industry that are driving the growth right now?
I feel like it's actually pretty balanced. We did, on the onset of COVID in 2020, at least in North America, focused on software and tech, pharma, bio, CPG and healthcare, and those bets continue to pay off for us.
I think very similar in other markets as well. So quite spread across and also across the different markets. So everywhere we see opportunities, more clients, and also bigger or wider projects.
Great. And you had to change the virtual delivery due to COVID. And how has the mix been during this quarter? Have you seen that your clients are moving back to physical delivery, or is it still quite a mix tilted towards virtual delivery?
In Q1, they started to return to in-person, and that was a mix of both executive team meetings, large company offsites, and more traditional learning simulation experiences. But I would say it just began again in Q1, and it's still probably Q1 is probably approximately 10% of the projects.
We are actually seeing that the virtual world is here to stay. So as Jessica said, we started 10%, probably will go up. I mean, there's more demand, but it will never be 100%. So we are gearing our services, and we see the demand is going to be a split demand for a lot of the clients. Some parts will be done virtually, and there will be a prioritization, especially on the really valued kind of offsite or workshops to be done in person.
And a quick follow-up question there: if you see in virtual deliverance, would you say that your share of wallet will increase then? Because if you deliver something virtually, you don't need rents for venue, travels, etc.
I'll think about it a little bit more like in the retailers, the omni-channel. I think it's a combination. So a lot of clients will be saying, I want some things virtually, I want some things physical, and I would like a partner that allows me to have a journey where these things, they combine seamlessly, right? So yes, we will see both of them happening for clients, and our people and our way of delivering will have to be geared for both. So we'll be ready to offer both in that respect.
Excellent. And my next question is, can you please describe the development in costs? How do you see the cost base going forward, and how do you see the cost base in the different regions right now?
The idea is to grow revenues faster than cost, because then the margin will go up. As you know, our goal is to increase margin from 15 to 17%. And that's something that you do by many small steps jointly. And we hope that this year we've grown revenues faster than costs and continue that journey going forward.
Okay, excellent. And I have two questions left. My next question is regarding M&A. You have done some transactions recently in the history. How do you see this market, and how do you see the valuations in this markets?
Acquisitions are important for us. They bring us into new market. They bring us new capabilities. Clearly, valuations have been climbing. Now, the last couple of months, the opportunities are better. And we see that acquisitions will be an important part of growth going forward, even if organic is the vast majority of our growth.
Excellent. And my last question will be regarding growth. We see that there is quite strong market growth, and you're also taking market share. Can you please elaborate a bit on who you're taking market share from, and how do you see the market growth going forward?
We could probably simplify our competitors into 4 groups. First one would be traditional learning, leadership development, training companies. The second one, more search-based HR, broader talent services. Third one being the traditional consulting firms, especially as they're involved in big change and transformation work. And then the fourth one might be more ed tech or technology first players in the training space. And so we kind of carve out our unique niche and share against those 4.
Take share, from all of them. These companies are of course strong, but in our sweet spot, we are the best player. So we want to win from all of those 4 categories going forward, and we are doing that today.
And I think, Rickard, you mentioned market growth. I mean, market is also growing because I think companies, especially after the pandemic, they are realizing that the real asset is their people. So they need to invest, they need to transform, they need to help their people perform in a different way forward. And therefore, they need a partner to help them do that. So that's a headwind into the growth of the market in general.
Excellent. Jessica, Henrik, and Philos, thank you for taking your time to talking to us here at Erik Penser Bank. And all the viewers, thank you for looking. Thanks.
Thank you so much. Bye-bye, Rickard.
Goodbye. Have a nice weekend.